Let's speak about NEO stock, this short report, and this absolutely insane price action. What is happening, investors? It is your boy Jack. I am not a financial advisor. I got the clothing line to prove that fact. And I want to make it very clear from the start, I am long term very bullish on NEO. I own a position with an average cost of $14 a share. In the short term, however, I am not so bullish and I don't think we have found the bottom for this stock.
You're just a NEO hater. All you care about is workhorse.
I love both of them, my friends. I'm just trying to give you guys my honest thoughts and opinions. That's all I'm trying to do around here. So if you appreciate that, thank you for being here. But do understand, long term I still am very bullish on this company. And when I say long term, I mean I'm more than likely going to hold NEO for at least a few years. I can see this at least being a 5+ year hold. So the intraday movements may not be as important for me personally, and that also is why I'm not necessarily going to be selling anything. But I do still think it's important to understand what is happening in the shorter time frames, even if you are a long-term investor, especially when it comes to a company like NEO, who can move at the snap of a fingers. So in today's video, we're going to be speaking briefly about this report that came out from Citron, why I do think the price target of 25 is a very interesting number, and it falls between two areas that I have outlined on this channel over the last couple of weeks. We'll speak about what I think could happen next if I do think there will be a further sell-off. So right before we get into it, can I please ask you, my friends, to hit that juicy like button. If you're new around here, please consider joining the family, hitting that juicy red subscribe button, my friends, and please drop me a comment down below. I want to know, what are you guys doing with NEO? What do you think of them at current prices? With that being said, my friends, let's get straight into it. So we're going to come back to the stock chart later on, but let's start it off with this, okay? NEO. Citron pulls the plug on NEO 2 years after their controversial recommendation. They have set a new price target of $25 a share. So for reference, just yesterday we hit highs of over $54 a share. We closed it at $44.50 and we were down as low as just above 40. Insane day. So 2 years ago, NEO was trading at $7 when Citron recommended buying the stock. Now, 2 years ago they were 7, less than a year ago they were 2, you know, so you could have said they timed this absolutely horrifically. But in the long term, their call still made a lot of money. And they go on to say what makes NEO stock most vulnerable at these levels are two main points. Now, the first one they want to speak about is the Tesla Model Y China pricing. And to be honest, I think this is going to be okay. I think some more competition in China is going to be healthy. I think Tesla and NEO are going to be two front runners, of course, but I think it's going to be fine. I think it's a big enough market. There's never just going to be one person who dominates. Now, I do understand Tesla obviously is going to be scary to a company like NEO. I don't care what way you try to spin it. Essentially, local Chinese analysts are predicting that Tesla's Model Y will be priced substantially below the key price point that would be a threat to NEO. Tesla's strategy of passing its cost savings to customers could result in the made in China Model Y starting at a very reasonable price of about $41,000. Now, Citron go on to say themselves, we continue to see some risk that Tesla could materially cut the price of its locally made Model Y, okay? From about $73,000 to something in the mid to high $56,000 to $58,000 range. And Tesla is known for this, you know. Elon Musk has openly said they're not all about profit. He wants to change the world. He wants to make clean energy. He wants to make electric vehicles available for everybody. So this is definitely something that could be a reality. NEO, of course, you know, they have their mission statement. They want the world to be greener, etc. But from what we can tell, they also want to make a considerable amount of money. Let's keep in mind the government owns some NEO as well, so, you know, they're going to want them to be making money. So yes, this is something to be aware of, but it's not actually the biggest deal in the whole world in my personal opinion. I just want to value NEO as a company. Now, a lot of their argument revolves around Tesla, and again, as I just said, I don't necessarily think that's the most important thing in the world. There's always going to be competition. Competition is healthy and it generally leads to faster growth for, you know, the biggest competitors regardless. Now they go on to speak about the share structure. The float is open after years of trading. The short interest is at almost a 2-year low. Something to be very aware of, guys. There is so much bullish momentum right now, and I mean, that doesn't last forever. Look at any stock and you can see that's just not how it works. Anyone buying NEO stock right now is not buying a company or its prospects, rather you are buying 3 letters that move on a screen. Now, I don't completely agree. I think that's a little bit too linear, but what I will say is I do think a lot of people are buying the ticker symbol that is NEO. A lot of people are buying the hype that is NEO. Just keep in mind, guys, not too long ago this was a $2 stock, and it was also a $10, $12, $14 stock. There was nowhere near as many people as excited about NEO as there are now. And let's be completely and utterly honest, not much has changed in the last 3 months for this company. I mean, you know, don't shoot the messenger, it's the truth. I know sales are better, deliveries are better. They're not this much better. So that's why bullish, I am still very long term. They are constantly improving. Year over year has been absolutely beautiful. but does it warrant a 2000+% jump? No. So look, this Citron report I don't think was really was scary. I don't think there was very much brought up in it in general. But of course, people see a short report and they get scared. Now we're going to come back to this $25 price target that they set very shortly. Before we do that, I want to bring you back to around the end of October. Let's say the 26th of October all the way up to now. It has just been up and up and up. We've been trading nothing but up. I mean, very few red 4-hour candles, and they're pretty much always followed by an upwards movement. I mean, look, even this red candle, we went up from $30 to $32.70. That's not a normal red candle, my friends. So it's been extremely unhealthy. I've set out the trend lines here. You can see we broke below it, we traded below it a bit, we came right back up and respected it again. We actually opened right at the top of it before that big sell-off. So just looking at what happened yesterday, okay, we opened here, we went all the way up to pretty much $54 a share, and within a 4-hour period of time we were all the way down at 44. Huge drop. And then the next candle, we had gone all the way down to pretty much $40.50 a share. So nearly a 30% drop from intraday highs to intraday lows. So the 12th of November, a gap was made. It got filled the very next day, closed nearly at the gap. And this is where we're sitting at right now, $44.50 on the dot. Very small gap here, all the way back down at $31 or so a share. No sideways price action. That's a point of interest. Now guys, remember we spoke about the $25 number that Citron has put out there. This gap up from $21.60 essentially all the way up to $24. That's the day, okay? Listen up, that's the day JPM upgraded their price targets on NEO. Now if you haven't seen my video where I spoke about JPM and I spoke about their history of market manipulation, please go watch that. So that created this absolutely enormous gap. And so this could definitely be considered an institutional candle, a candle that was predominantly led by the likes of JPM, the big banks, the hedge funds, etc. And right at 50% of that candle is 25.20. Nearly exactly where Citron have come out with their new price target. I don't know if many of you guys know this, but oftentimes these institutional candles do come back to at least 50% so that they can make their money. Guys, Citron has been buying since the 7s. They would have pushed it up. JPM has probably been doing similar, if not less, in the 2s and 3s. They've all made money on the way up. They all want to make money on the way down as well. Do I think we're ever going to get back down to those levels? It's very tough to say right now. But guys, keep in mind that it's gone up so quick, it can come down just as quick. If you follow NEO, you probably follow a lot of EV related companies. You have seen this happen so many times over the last few months. You saw it with Hyliion, you saw it with Workhorse, you saw it with Lordstown Motors. You've seen it happen an awful lot, my friends. And remember what the market sentiment was when all of those companies were going up? We all thought it was going to happen forever. It's absolutely beautiful. There's no way it's ever coming back down. They all did. There most certainly is a chance, in my opinion, that NEO can come back down towards 25. Now, of course, I'm hoping it doesn't happen. I am a long-term bull. I do have a position. I would love if it just went up forever and ever, but I do think it's important to understand the risks. Now, I know a lot of people are going to say, but Jack, they're performing so well. The deliveries are up hundreds of % year over year. So, I mean, NEO delivered 5,000 vehicles in October 2020, and that was 100% year over year growth. Amazing, you know, beautiful growth. October 2019, NEO was $1.56 a share, guys. I mean, yes, I love 100% year over year growth. Quarter over quarter growth's been the same. It's been incredible. A year ago they were 156. That's not the kind of thing you can just choose to ignore. You have to acknowledge that this is the fact. Look at that max stock chart, guys. It's absolutely insane. One more point from the short report. NEO has acted as a great trading proxy for Tesla, given the valuations have historically been highly correlated. Remember, Tesla and NEO were trading very similarly for a considerable period of time, at least a month or so, maybe a month or two ago. There is now a massive disconnect with NEO trading at the largest premium to Tesla in history, at double the valuation. On NTM EV sales, NEO was trading at 17 to 18x versus Tesla at 9x. Tesla was delivering a quarterly run rate of 15k vehicles, similar to NEO today. Tesla had 45% share of the US EV market, while NEO has 3% of the Chinese EV market. So guys, just keep these points in mind. I know when a stock is going up, it's so easy to be a bull, it's so easy to speak highly of a company. What's hard to do at times is to really look at the company and ask yourself the difficult questions, you know, Is this justified? Should this be happening? Should I be worried? Should I be buying more? That's kind of your job as an investor, my friends. We all get emotional at times. We all get excited. I definitely do it sometimes as well. But we do have to stay somewhat rational when we're looking at companies such as NIO. Now, what do I think is going to happen next for NIO? Okay, their next earnings, November 17th. So Tuesday after market closes, okay? Not long at all. These are going to be very, very good. No doubt in my mind. I think they're going to be absolutely fantastic. And I do think we could be surprised with some good news as well, because NIO has been killing it as of late, okay? That's partially why I believe this may have been brought out now before earnings, because it could be easier to push a stock's price lower now than it will be after we see a really good earnings report. But keep in mind, guys, we all expect a really good earnings report. We know the delivery numbers. We can make estimations as to what we can expect to see. It's not going to come as a surprise. So yes, Citron, in my opinion, wants to push the price down. I'm sure they had puts, they had sells, etc. They had already taken all of their profits, so maybe they did it now just to make a quick buck. But with that being said, guys, okay, we expect really good things from NIO. And expectations are being set extremely high by a lot of analysts, a lot of big funds. So if we don't get an absolutely incredible quarterly report, that could be an excuse to create a reversal. That could be an excuse to push us back down to some critical levels. It could be an excuse to get us closer to a neutral 50-day average. Remember NIO's Q2 earnings, my friends? They were fantastic, and we dropped, I think it was 10 to 12% that day before moving back up. NIO has a history of being manipulated, and that's not going to change anytime soon in my opinion. So just be aware of that. I know we're all excited for the quarterly report. I most certainly am. I can't wait to see what they come out with. Maybe we will get some more justification for a higher price point, and we can completely forget about $25 price targets. We are going to have to wait and see, but thankfully we don't have to wait too long. So my friends, that was my update on NIO. Hopefully you can appreciate me trying to, you know, give both sides of the story. Again, I'm a long-term bull here. If you enjoyed the video, enjoyed my thoughts, got some value, some entertainment, please consider hitting that like button. Drop me a comment down below, let me know what you think, and subscribing if you're new. All of those things are free. Take like 5 seconds and help me out so much. And also, if you are interested, please hit that first link in the description and sign up to become a member of my Patreon. You'll get full access to my private Discord, my buy and sell alerts, over 40 chats. It's awesome. With that being said, my friends, have a fantastic day. I will see you for another video very soon. Peace.